Good afternoon, traders. Trader Tim from eminimind.com doing a Monday market analysis video. It's the 1st of February 2021. And you can see on our up channel drawn on our SPY chart here, we've got some bigger volume that occurred over the last couple days. And you can see we're at the bottom portion of the channel. Notable last week was a break of this swing low on the 15th. And at the close on the 28th, we set up in a kind of a halfway back short, which was the first daily short that had followed a break of a swing low. So we have a swing low on the 25th that was taken out, and we have a swing low on the 15th that was taken out. The 15th being the bigger one that sticks out further down, and then if we go further back, the 4th, the 21st, those are kind of the major swing lows. And so a good opportunity for a short at the close. I talked about doing the 378s, and I just wanted to mention briefly, if you go over to your trade tab, you'll probably see all kinds of expiration dates. So with all of these weeklies, if you're trading something like the SPY and a lot of these bigger traded stocks, just pay attention to their expiration date. I'm okay going with some of these weeklies. What I like to do is compare them to the next month strike. So like right now, we are on the daily chart. If we completed this negative 23% target, so that 378 that I put on the 28th, I took it off on the 29th because we completed the negative 23% target. And with options, if you're holding them too long, the price of the option may not continue to go in your favor, even if price does, because of time decay. And I'm not going to spend too much time here on the options. We'll jump into to futures here in just a minute. But it was something we were talking about in the room last Tuesday, so I just wanted to recap since I did not have a chance to do that at the end of last week. So if we were to draw up now the full halfway back from highs to lows to see where the next 50% is, it's a 377 on the SPY. So if we were to look at the 377 at the money put option on the February, the typical monthly expiration, you're looking at around 670. And then the delta is around 50 and the theta is around 20. So if we come to like the February 8 weekly and go to that same 377, it's about $2 cheaper for the option. The delta is actually about the same, and then the theta is only slightly worse, slightly larger. So it's going to decay a little faster. And obviously this theta on the weeklies will accelerate very fast, especially if it's out of the money. So if we're looking for a quick drop, in the sense of getting in on a close and then selling out in the next 2 or 3 days, that's a situation where I'd be okay, going with the weekly expiration. And if you just look at a calendar, the 8th would be a week from Monday. I'm not going to put on a position that's expiring the next day. But if I've got 5 or 7 days, you can get a little bit more bang for your buck if things move right away. So that's all I'm going to talk about as far as the options go. But on the larger picture, we are reaching some support down here. We spent a lot of time in the month of December. And if we move now to, we'll just go to a daily chart. Actually, we'll go to a weekly chart of the SPY. And pretty small pullback relative to all of 2020. When you're on the weekly chart, you're like, wow, this pullback is pretty tiny. I'm just going to get rid of everything on my chart, and we'll start fresh. So here's our weekly chart. Obviously, this candle is only one day. It's just today's price action. So it's inside the whole weekly bar from last week. It is pretty bearish. The high encompasses the prior week's high, and the low encompasses the prior week's low. We can even, now that the month is closed, we can take a peek at the monthly chart. A bearish candle on the monthly. I'm not, overly expecting a full halfway back at this point, but we'll see how the start of February goes as far as if we start accelerating to the downside. That becomes more of a possibility, but at this point, if we just look at the daily chart on the ES here, we can see, again, lots of time spent around that 3,700 level in December. There's also a lot of folks that have, this disposable income that may have been sitting on the sidelines, or what often happens, pandemic or not, anytime there's a strong bull market, you get folks who did not buy on the pullback, and so they're looking to buy anything they can on any sort of small pullback at highs. And so, aside from the pandemic, external factors and everything that's going on with the Reddit and GameStop stuff, I think there's definitely some opportunity to catch some support here and take us back up to highs. If we were to come up and make a double top, that would be a little bit alarming. But if we just, today roll over and trade at the next negative 23% target, a pretty healthy structure. The VIX is not incredibly through the roof, sky high. So if we get a couple daily completions from 50 to target, I'm not going to be overly bearish just yet. That channel, that we're sitting at the bottom of, we would really need to come down and complete the negative 23% target to really get a major move outside of that channel. Right now, we've peaked below it. We have one close from Friday below it, but at this point, I'm not jumping ship just yet. Let's do. Before we go to the ES trades, I just want to mention a couple swing trades. CMG set up real nicely today, breaking above the high of this box that we've been in, kind of above this 1512 area. So I like CMG here. We do have, let's see, their earnings are tomorrow afternoon. And then First Solar, was another one that came on my radar. And it's sort of putting in a hammer right at the bottom of the channel. So a potential move on First Solar back to the top of the channel. And then the other one, KBH, is sort of in a bull flag with some prior support back here. And I like this one. They've already announced earnings. I like this one for a move higher as well. So let's turn to futures, which is what most of you came here for. If we look at today's open, you can see the gap up on the ES, and you'll notice we saw this a lot last week and the week before. This low from the prior day, here's the overnight gap up. And so if we take the afternoon of Friday, take that low to high, we can see a 50% retracement, and that's where we reversed today. And let me pull up my trade log here. So the first trade today actually ended up being a short at 36 minutes after the bell, and we did set up here. So we bounced off of the 50% long down here pretty early in the day. There wasn't a great setup off of that move higher, but we did have a nice short setup off of the trading hours only high to low. So when you're coming into the day and you really don't have any reference points, starting with that afternoon low, the morning's high, just finding whatever you can to start your day. Obviously, I don't have the overnight session on, so I'm putting more weight where there's more volume. on the afternoon session, and then the morning session. The overnight, not a lot of activity going on. This one's a little hard to see here after the fact, but I actually drew it up like this, and we had a very quick spike up. I almost didn't get my order in here at 37.30.75, and that one took us back down to that halfway back long, 37.21. That went for about 4 points, and then first target was 3 points. So that was a nice little short. And then 822 was a long that I took, and this one is entering on a failure of the halfway back. So this is where this halfway back long from the morning comes into play. The 37.21 long traded first, meaning we came down and touched 37.21 before we touched 37.32. But at big halfway backs like that, you can get moves, and even if, like on the short side, 37.32 down to a 37.21, that's a 10-point move, and I'll take that if that's all we end up getting. And so the short failed. You can see the red candle here, or the green candle here, that punches through on the 5-minute chart. And over here, this is what it looks like on the 512. So when the market's coming up and it breaks through the 61.8, that's this gray line here. The yellow line is the 50%, 37, 32 and a quarter. When that happens and we fail the 61.8, sometimes what I like to do is grab from the swing low before the 50 to the swing high above the 61.8. And so that's how I drew it there, and get rid of the short failure. So now we're essentially in trend, the long trend, with a target up here at 37.59. We kind of stalled out and didn't make a huge run, but I was able to get a 3-point first target, and then break even on the second half. Now what I like to do when the market makes a new high, so at the time you're in the trade, it looks something like this. You draw up your setup, moves forward, fills you, 2-point stop goes out there, 3-point target, and starts to tick forward. And once we come up and break highs, I like to move my stop to break even. And essentially what's happening is I'm trailing the next 61.8. So if I draw from low of where my entry was to highs, trailing that 61.8 puts my stop about break even. So rather than, in the essence of simplification, as soon as we break the swing high, bringing my stop to break even, and then as we go higher, if we go higher, I can adjust my anchor point like this, and then I can come in here and say, okay, well the 61.8 is 34, and it's an odd number, 91, so I'll just round down to the nearest quarter, which is 75, and then I'll subtract a tick or two to give myself a little bit of wiggle room, and then I can adjust my stop accordingly. But when you're in these trades and things are happening very quickly, swing high breaks or swing low breaks, if you're short, it's just boom, I can move my stop to break even, and I can assess the trade from there. Having that first target out there at 3 points is usually around the negative 23% target. So because it's already in my brackets, it makes it really easy for me to not have to be doing 50 things at once. I can really focus in on just the important things. I am spending more time with Trade-Evate, the platform, versus Thinkorswim for futures. I've always loved Thinkorswim for charts, and most of I've used Infinity Futures for a long time. But since spending time with the folks at Top Step and their white label platform is Trade-Evate. So that's where I got introduced to Trade-Evate. So I've been spending more time on their platform, and I really, really like it. So if you are not on a platform yet, or interested in something that's very clean and streamlined, take a look at Trade-Evate. I don't have any affiliation with them. I just have been enjoying using their futures platform. And the last thing I just wanted to mention is I have been doing more trading on the NQ. Now, the NQ moves pretty quick, and so you do have to be, I like retracements and using limit orders because the market does move quick, and so you're not going to experience the same kind of slippage as if you were using buy stops and sell stops. So today, let's see, it was 8:36, and if I go to my log here, 8:36 was a short, and this one was a reversal at highs. That's right. So we had kind of a double top, if you will. And if I come in here, I ended up taking a short. Was about like that. 13.95 was the short entry. This one only made it to its negative 23% target and then turned around. So I've been using the same approach, only a 4-point stop with the NQ. The ranges are a little bit bigger than the ES. It moves a little bit faster. To be honest, it's not my favorite. The ES, the speed I'm a little more accustomed to. The NQ is a little faster, almost like the YM, where the trade ladder is just moving so fast that it's easier to make mistakes. So I've been trading the NQ for a while, but more fine-tuning things over the past 4 or 5 months. And I do like the numbers that I'm seeing, and it is a nice way to be able to have a little bit more trade activity throughout the day, but I'm not trying to trade both at the same time. So like I wouldn't be putting on a short in the ES at the same time I'd be putting on a short in the NQ. What I'm finding is that, if my main focus is still the ES, but if things are just not, if it's slow and there's not a lot happening, or if maybe I just don't get a setup on the ES, then I might turn to the NQ and watch for, okay, the NQ is breaking into new highs. The ES has not yet. So maybe the ES will be following suit and following the NQ here in the next 15, 20 minutes. So comparing those two together is helpful. The NQ does have its own nicey tick and breadth and advanced decline line and whatnot. But I'm trading the NQ less than the ES and just trying to almost supplement trades that may not be in the same direction. So I may be setting something up in a long on the ES and then watching the NQ set up in a short, and maybe I don't get a fill on one. If they're both going in the same direction, maybe I'm looking at a long on the ES, doesn't get a fill, but the NQ might. So trying not to trade them in conjunction where I'm just doubling up on the same direction, but take a look for yourself. And again, it's I'm using a 4-point stop on the NQ, which is pretty tight, but the good trades, the winning trades, they're going without much dawdling. And when they go, boy, they rip pretty hard. So take a look at that, but just know that it's a little bit quicker than the ES. So tomorrow morning we'll be doing a live trading session as we always do Tuesday mornings. You can check that out, eminimind.com/VIP. Thanks, and questions, leave them in the comments below.